back here at PDAC 2020, and I'm very happy to have actually a new guest. We've known each other for quite a few years, Paul, but I'm very happy to have him on board, as I think he'll provide a little bit of different perspective, just the way of where he's from in Europe, in London there with VSA Capital, Mr. Paul Renken. You're one of the geologists there, actually.
I'm the geologist.
The geologist. There you go, the geologist. Well, I mean, I know what VSA Capital is, but you can kind of tell the audience, what's VSA Capital?
Yeah, I call it a boutique investment bank. It got founded originally under the name of David Williamson Associates 30 years ago.
Oh, okay.
It's under current ownership since 2012. And you would call us a corporate advisor, a broker. We write research on the natural resource sector, oil and gas, mining, timber, agriculture, battery raw materials. Mm-hmm. We do a little bit of fintech too.
And you have offices where?
There's main offices in London, and then we have a branch office in Shanghai, China, and an affiliate office with VSA Capital down in Johannesburg.
Interesting. That's great. Well, then we definitely have to talk about the Shanghai office, as we were just talking just prior, talking about the coronavirus and everything. So we'll get to that in a moment, as I'd like to get your insights on that. But let's look back a few years ago, and let's focus on the mining sector for now. You've been in the sector for quite a long time, and I want to get your opinion on the valuations of the mining companies, a few years ago as opposed to now. What have you seen that has changed in terms of production metrics, all sustaining costs, shareholder value, just anything that you've seen in the market that has grabbed at you over the last few years?
Well,
anything specific?
Yeah. When we were looking back at the period of time like 2015, 2016, we had weak commodity prices during that period of time, and yet we had companies, particularly the major companies that were with much higher debt levels and so forth, and
right.
The shareholders were asking for a better return on the capital they were putting in these companies. The market multiples were quite a bit higher than they are now, and we've seen essentially a rationalization on the balance sheet and essentially within the senior suites of the managements of these firms in order to put much more of a focus on return on the kind of investments that they're making.
And what does that rationalization mean? We'll define that. What do I mean? Does that mean, we're cutting costs all across the board? We're not doing share buybacks? Like, what is it exactly?
Well, you've seen them rationalize the project portfolio such that they have much better cash costs of production, all in sustaining costs and so forth. You see a higher focus now on dividends, particularly among the major people.
Yes, you've seen that increase from this institute dividends or restarted them, and they just in the last year, some of the majors have increased from 20% to as high as 40%. Just like that, and special dividends you see for those that can't have a regular sustaining one, but with a special dividend, it's a recognition by managements that the shareholder wants to be rewarded for holding the company, particularly if they're going to be holders through thick and thin because of the gyrations of the share price itself. Interesting.
And we've seen those gyrations, just in the last week when there's nothing really different in the fundamentals.
2 days. Yeah.
So that's the kind of thing that the shareholders want to have some confidence in, is to be able to hold an investment in these firms.
That's really enough for these mining companies to really bring back shareholders to the sector?
Well, if you're going to bring back generalist institutional investors and not just retail investors, you've got to demonstrate that you have some sustainability on earnings.
Right.
And that means is that you don't there is some protection against these gyrations in commodity prices within the actual operations of the business, such that they're able to show some consistent earnings growth, consistent dividend growth year after year after year, because then it becomes a part of their regular portfolio and they actually can compete against the other sectors that they're invested in.
Right.
And that's what the institutions want to have.
Right. Excellent. Well, that's great feedback. Let's now shift back over to the earlier point regarding the coronavirus. You've worked around the world. You have offices in several countries there, one being in Shanghai, China. What is your feedback and honest opinion and evaluation of or observation of the coronavirus in China from your colleagues there? What's really happening?
Well, what we can see now with the news that's been coming out certainly since the middle of January, but with the specifics that we've gotten in independent confirmation from outfits like the WTO on their own review of the situation on site and that sort of thing. I think we're getting a fairly true picture of both what the incidence and what the pace of the coronavirus growth of infection is within China. After all the indications are it is what we would otherwise consider a flu virus. It's not really different from that, but only in the sense that the complications when it's a more serious situation with those persons that develop the pneumonia-like symptoms. And it's the pneumonia-like symptoms and the number of those as opposed to the total number of cases. And it looks like it's something in the order of 15 to 20% of those that get coronavirus end up with the pneumonia-like symptoms. And what the whole rest of the world is worried about is pneumonia-like symptoms generally require some sort of a hospitalization or extended care. And there just isn't enough beds for that many people with pneumonia-like symptoms.
Interesting.
And that's what they're trying to curb the growth of this, particularly outside of China now.
Right.
The worry spot right now is northern Italy in the last few days.
Right.
But there's also seems to be some regular growth going on, Iran, Iraq area, that sort of thing. Other than that, it's a spot here, it's a spot there. And frankly, we're going to see that it is a flu virus, and we're not going to stop it entirely.
Right.
But the idea is to be able to control its spread such that you can deal with it as a regular flu virus.
Right. So then how does that affect the mining sector overall in terms of shareholders, looking for companies to invest? I mean, for you, does that affect how you invest in companies now based on jurisdictions, or overall, what are your thoughts on that?
What it's doing right now is it's influencing the supply chains on the manufacturing side.
Interesting.
And what that means is that the businesses are being overly precautionary at this point, where they're furloughing, or I shouldn't say furloughing, but they're asking people to stay home from work in order to just not take the chance that somebody that showed flu-like symptoms actually had coronavirus and would end up spreading it among the general employee population. Now what that has done is that has really slowed things down as far as the intermingling of people. Whether that's intermingling of people at work, or whether it's attending a convention like PDAC, or the number of conventions that you see some cancellations on public events and that sort of thing around the world. That's the cause of concern. And when that happens, then you get materials which the raw materials have been put into the fabrication product, but then they can't go on through the manufacturing cycle and end up getting distributed after that. And that's what's slowing down the economy.
So we just talked before I started the interview, but you mentioned, inventories are building up.
Yes.
So what's the effect of that?
Inventories building up is depending on how long the curbs on the intermingling of people take place, you'll ultimately end up with some furloughs of employees for some period of time, like extended vacation and that sort of thing. You saw that initially with extending out the Chinese holiday for more than a week. But you'll see that around the world more and more at individual businesses. This will play out over time, and as we get out of flu season into the summer months when things are warmer, the virus will abate for that period of time. There needs to be some time yet in order to develop the flu vaccine such that they can get more people vaccinated and otherwise with a protocol in order to treat these pneumonia-like more serious symptoms. And that will play out over a period of months. So we're looking at a relatively weak period here, I think, for first and second quarter, but we'll come out of it as we go into the summer.
So will that, I guess, affect, the phase 2 trade deal that the U.S. and China are working on around? Phase 1's done, but now how does that affect the phase 2 trade deal and the economy?
Frankly, I don't think it affects it at all. What it comes
and
down,
why is that?
And because they realize that this is a temporary phenomenon that will play out as the virus itself plays out with the warming of temperatures and with the further developments on the medical side as far as treatments and vaccine and that sort of thing. As far as a deal on paper that is coverable under law and trade, I don't think it has much influence.
Interesting. Oh, okay. And I guess you're on that side of the world with with what happened with Brexit. So that's done. So what do you see for going in the Eurozone there with regards to Brexit? That's already completed now.
Well, we have
go ahead, sir.
up till the end of the year, we have to decide what kind of a trade agreement the UK has with the EU.
Yeah.
They're still arguing over that debate, just as they've been arguing over it for the last 3 years. It's not a done deal yet.
Yeah.
And we'll see what happens, but whether or not it'll be a Canadian-like deal or a Scandinavian type one or something totally different from that, we just plain don't know at this point. But right now, it's operate as you have been operating before, and we'll deal with it as we go along. And that's essentially what all the businesses, including our own, has had to go with.
Interesting. So, what are you looking at for mining companies in terms of when you look at deals now for 2020? Are there any specific jurisdictions that you're looking at? Stage of development? What are you working on with your clients?
With our clients, what we're particularly interested in is the precious metals projects, particularly the gold and silver projects, simply because in a period of time where the overall economic sector is looking weak, people will put a higher valuation on gold or on bullion itself. So that will be a relatively strong sector in relation to other sectors for the foreseeable future. Our Chinese clients have told us that we're interested in gold deposits, seeing gold deposits. We'd prefer them to be more advanced ones. We'd prefer them to be over 1 million ounces in indicated resources.
Okay, so that's their threshold. Okay.
But beyond that, they have the same concerns about jurisdictional risk and security risk and changes in taxes any other investors do. So,
Interesting. Okay, well, what do you think about 2020? Are you bearable?
2020, I think we'll have a mixed package, I'm afraid.
Okay.
It'll be a mixed bag.
Mixed bag. Anything jump out to you that says, you know what, okay, I'm sure this will happen?
I'm sure we will have a recovery later on in the year as the coronavirus abates. I had been predicting that for this year, my particular favorite commodity, though, is diamonds.
Interesting.
Simply because it has been so beaten down so badly that any kind of recovery, in order to come out of coronavirus, requires a lot of stimulative economic policy. And that means some inflationary pressures intentionally put on the marketplace. And diamond price has just been too low for too long.
Yeah. That's great, Paul. Thank you so much for being on the segment. I really appreciate it. Great insight in terms of what you do and the sector overall. Really interested to find out what the coronavirus has done, so I really, really appreciate that. And if you want to find out more about Paul Renken and VSA Capital as a whole, I'll put a description down below, and you can click on their link, and you can find out more and contact Paul directly if you have any questions.
Just VSAcapital.com.
Yeah, VSAcapital.com.
Yeah.
Perfect.
Very
Thanks,
good.
Paul. Appreciate it.
Yep. Thanks.